Bitcoin here, see what's going on. Just turn these guys on. And what we had here, we never broke our 4-hour trend. Where's our daily as well, though? Because we have that daily as well. Did we ever break the daily and adapt it? No, we didn't. This is kind of the scenario that we were looking at before, where we were saying, okay, well, yeah, I think we did this with Joe. Joe had asked if we should adapt this trend to the 4 up here, and for the simple reason that this trend would be exactly what we had talked about had happened, where if you had adapted this to here, you would now have to go and do counterintuitive work. So you would now actually have to draw back and go back into the move and remember to adjust it, because it still hasn't broken, and then really being controlled by that 4-hour level here. So yeah, it's funny because the exact scenario that we wanted to avoid is kind of unfolded with why we wouldn't move this trend here. So that's kind of good. It's kind of good to see. Then we can go into this move, see what had happened with Bitcoin here. Let's stick on the 4. Like, did this 4-hour trend ever break? I haven't really checked Bitcoin since. No, it looks like it didn't. It just held its move. So then what did Bitcoin do here? So it went after that level that we had marked. It went after this side of this range, right? It has the daily. Jesus, this is a lot of levels. Let's start removing some of this, just so we can at least see what's going on. So we got the 4-hour, we got the daily. We don't need any of these levels that it hit and didn't pull back at that level up there. We talked about that. Good morning, Matt. There's the 4-hour hold here. It looks like that's what this is, or 4-hour inverse possibly. 4-hour inverse held it down. Good. Your hourly trend. You don't really need this. You can actually just move this to the 4-hour trend here. So you've got 4-hour here, 4 to 4, and that there, 4 to 4. So you got two trends there. I don't even know if you're going to end up needing those for either of those 4-hour trends. Let's keep working with this thing. So we have 2 levels on top of each other here. We can take one of those away. Take a look at this 4-hour. Obviously it got hit somewhere deeper in the range. I believe it was a 15-minute level. We can get rid of that anyways. That's fine. Hourly level here. What do we have marked on the hourly backside? Never broke over. So that was kind of it, right? Like, it needed to hard close this hourly. Like, if we rewind back to here to our last session, we look at this. This is where we had left off, saying that, you know, this is kind of like a really good spot to be in, and look for the long to break the move. And really, like, one of the pieces that I need to do is get over this hourly, and it looks like it never did that. So it looks like it goes up to attack the move, right? Has a pullback. And it looks like it tried to stabilize against something here. A 5-minute level or something here. Backside 5-minute. Okay, fine. Tries to stabilize against that. Go back up in the move. Looks like it's creating some type of trend work here. Yeah, no, nothing really to report there. Really just needs to break over that 15. Hourly. So it created its hold level here. So that was pretty important. It needs to hold this part of the move, right? Or it needs to hold this. Break over that hourly. Doesn't hold it. Fails its move, right? Fails its move. Goes down. Ladders. Kind of what we were saying. It can still ladder off those greediest points, like right back in here. And that, you know, you have to kind of take your spot. So you have this stuff down here, right? And you have your kind of like a greediest spots down here inside the range, where you're playing a different part of the range, right? And you can zoom out, and you know, we haven't gotten back to here yet, but you know, what was important here is that you know, kind of the same thing here is the same thing here. Like, we had broken this down, but it's kind of the same thing here, like laddering off the greediest part of its move. I'm not sure why this is purple. I'm just going to go ahead and delete that. It's its 1-hour level here. It's fine. That was trying to hold it up, so it doesn't break the move. You can just even delete that. It's not useful anymore. Go straight down to this part of the move. Right, we were here already. Looked at this. Falls right down to Yeah, okay, so this is where we left off that day. Good. So falls right down to that level. And I believe some people had been in this trade and got out, and that's really the key of that move there. Like, I'm sure it hits this time frame break before or hold level before. Yeah, that bounces it, and really telling you the move is going to break down, right? So that was kind of key there. So good thing that we saw that. Good thing that we saw this break level being hit as a pretty significant piece of the puzzle, because once that gets hit, it gives you the kind of the perfect reason to get out, right? Has it gone anywhere past this yet? So it broke this right here, which is the daily. Hasn't hard closed the daily yet, so trying to hard close a daily, possibly creating the weekly here. Okay, yeah, nothing to really report, all kind of straightforward. Daily to daily, hasn't hard closed it yet. Could assume it hit something inside of this, right? Like inside of that, maybe a hold level or something here. Yeah, probably likely this. Yeah. That's just a hold level inside the move before it gets to the lower range. So it hits that. What is that, the 18th? So that's yesterday, so it's been kind of trying to move up since, right? Yeah, okay. Kind of moves up a few percent here, still lingering around. Trying to regain the daily right now. Not hard close that daily to create a bigger weekly. That's really the story here. If we can stabilize, that'll be nice, but it really needs to move up and over. So just a quick little recap on what's happened over the past few days here. Nice to do a recap instead of just sitting in silence waiting for 15 minutes to pass while we wait for people to get here. Morning Sam, morning JP. Audio levels okay, looks like it's pretty good. We'll give it like 2 minutes and then we'll start. Again, today's going to be easy. We're going to do one video today. This month we've done a lot of really heavy work, so yeah, there's not much to review here. Like, we didn't really, it's just nice to kind of keep up on Bitcoin. There's not too much to review here, I see, because, you know, like it's a good review, but oh, by the way, you're welcome. But like, it's just, I wouldn't even really, don't know if I'd call this a review. I would just call it keeping up with what Bitcoin is doing. I think there was some shorts missed in here by not getting to the greedier part of the move, and I think the important thing that comes out of this is that is going to be this weekly to weekly. I think this is going to be the important thing that comes out of this. You know, at the beginning of all of this stuff, what we had wanted to do, you know, we can delete a lot of this. A lot of this isn't useful anymore. Beginning of this, what we wanted to do is we wanted to, you know, you can almost just start over here. Yeah, you don't really need any of that, actually. What we really wanted to do at the beginning of this thing was to see if this origin level that broke the move down was going to hold it, and it looks like it indeed is over the larger time frame. So weekly to weekly, and we've got our daily trend that's already higher. So this trend right here, this weekly to weekly trend, will really be pretty important. Can really hold the move down to a lower range in the charts, a much lower range. So yeah, like, great for Bitcoin, because it looks like it's going to be moving down. I had originally thought this was moving up, but, you know, now that you failed that attack on the move, and that was kind of one of our scenarios that we created, right? This level breaking it out and going to attack it. Now you've just got the bigger time frame that's been developed. So yep, really great to see that we have a weekly trend here created, just like a distribution to distribution. Now we can't say it's created for sure, but I don't see us getting over 42,000 in the next, what is it, 36 hours. I don't see it happening, but you know, I don't know, maybe some crazy movement happens today and we hit some nutty support and it just launches up, maybe, and then maybe this becomes support tomorrow. Yeah, I hope it moves down too. Me too, man, me too. There needs to be a little bit of reality in these markets. That's all I'm gonna say. I've been saying it for a long time. Bitcoin can see some very low numbers once again. You know, it's on the charts. I just keep quiet about that stuff now because it's not my place anymore to prove myself. I've done that for 5 years now. Now I just keep my a deeper stuff to our group only kind of thing. And yeah, like 10K maybe we see again, maybe 10K. I'm not, you know, I'm just, if I was actually going to look for what I thought Bitcoin could go to, I would start in this region here and hope, cross my fingers that this could hold. That's where I would be at with this thing. And I wouldn't be looking at a BTC USDT perp chart. I'd be looking at BXBT. Be looking at this guy. I would be looking at this guy to see where this thing can hold. And it looks like kind of right here. BXBT is the perp contracts, I believe. I believe it's perp contracts for BitMEX, but BitMEX has the history that Bitcoin needs. BXBT, XBT. It's XBT is a legacy ticker that we used to use before Binance existed. Like when trading back in the day on BitMEX, it was XBT was the original ticker, and then they introduced BXBT, which is their a dollar index for it. XBT no longer became supported, and BXBT was the kind of the supported price that was traded on. Twitter, like Bitcoin as a solution to the Canadian truckers, GoFundMe seizures, etc. No, not really. Yeah, that's so true. Money's only good if you can use it. I don't care. I don't care what people say how invisible it is. If you can't use it, you can't use it. What are your thoughts as far as buy ideas, long, short scalps? I think right now we could be going into distribution. I mean, yeah, really, I think everybody knows that when you hit this level. I think that's pretty obvious. I think you need to kind of see how today and tomorrow pans out, Joe. If you're talking about a swing and position trades, I think as scalp trades, you kind of are living in a range of like this to this right now. You could possibly consider this as a swing trade. Like I would like to see what this stuff does over the next day here. In terms of taking trades right now, yeah, I mean, it still looks like it's moving down. I think the shorts are a little late on the book, and I think longs are a little too risky right now. Do you have any kind of like major support that was created? The hourly right here. I don't know if it holds this. It's okay, but maybe okay. So that's also the 15. You've got the 15 that was held here, so the 15 is kind of already fried. I'd like to find like a clear logical trail of a level that was hit that can follow up and create some kind of forward moving architecture. Like this 3 was hit here, that's fine, but then I'm pretty sure this is broken down now, right? It is. So is there any kind of starting point you can create with this thing? That's like what I would first say. Is there like some type of starting point you can create? Did this get hit? Probably not, right? Yeah, maybe you could try to long right here. Just take some basic hold levels right now. And this wasn't hit, so what's the spread between here and here? Take your pick between this and this. You know, at this point, I don't even know if it has the sustainability to move up. Maybe I would go for this one here, 690, hoping it closes over the 5 and then trigger out if it doesn't. Maybe I would use this as a guide, this 5 minute here. I would do something like this, Joe. If I was looking to long, you can think this 5 minute can be the guide to the trade, and then over time you can regain this 15. The 15 is already tested. The 5 is kind of a floating level here. It's a pretty small time frame, but it's a floating level in a way. Off of the 1, which was never hit, off of the 3, it's a floating level, so it's kind of built up architecture wise from the 3 to the 5. So you have like a floating 5 minute level off this 3, I believe. Or did this actually get broken through? Yeah, it's not even really a 3, is it? No, it's not. That's right, because the 3 was hit right here. That 3 was hit there, and then it looks like it's moving down. If it holds this great, I don't know though. It kind of looks a little suspicious to me. Maybe go after the 3. I don't even know if this is worth it though, to be honest. Maybe here if you want a long. So those replays are up, Franco. We'll be doing some of that work later. Today we're just going to go over this replay. I'm just doing a little bit of a catch-up session right now, but we've had a lot of heavy work this week, so I don't want to get too much into let me see how I feel after the session, Franco. If not, we'll save that for next lesson. Just as a quick answer, Franco, I think if you assess the risk of a move, you would be able to see that. Like we assessed the risk of taking shorts up top earlier this week as pretty high risk, and yeah, like I don't want to say shorts. Taking this level as a short was high risk. Like there was a level up here that was like ultra high risk. So like taking this, you can like say it's high risk because of the what's happening with the trends, right? Like the levels that are being broken. This became high risk. You never reached that level, so high risk never existed. It just kind of moved down off of back testing this on the weekly. So you always have to look at the scenario and say, okay, why would this be high risk? Like how does that make sense as high risk? This here, what I call it high risk or low risk. Well, the first thing I would do is I would look at that trend, saying that this trend is going to try to hold. Longing trend would have been high risk. I don't think playing trend here would have been smart. This is starting to become a little safer, getting into these regions where you might end up moving up through the day. But as time goes on, it becomes higher risk though, because you're hard closing the daily. So you can always use trend as a kind of a guide, right? You can always use trend as kind of a guide. The closer this gets to closing, the more high risk it becomes. You could go after this. I don't think it's too high of risk right now. There's not a high risk here because if it starts to move down, you have a pretty easy exit. So I wouldn't see this as very high risk as a long. People will be disappointed, already are. Yeah, it was an unrealistic thought. It always has been to see Bitcoin up at these numbers people predict. I've never been shy to say that. My sentiment has never changed on Bitcoin. That can go back all the way down to like 6 or 7K. And then maybe then once we see these like crazy low levels, and if it can hold for a third time, like if it can hold again and create some even bigger time frame moments, then maybe in the future it can be what people think it is, just not yet. It's too fast. You feel like crypto is the only market with this up only market sentiment. All other trade asset or commodities commonly understood that it goes up and down. Yep. It's just a young generation TikTok mindset, TikTok and Twitter mindset, but those people, they're not doing anything with it, right? Like you have some early adopters that held all the way through, but for the rest of it, you know, it's a lot of people who just talk about it and don't really have anything to, you know, stand by. Any trader knows like Bitcoin is just like any other market. Any real trader knows not to fall for that hype. The falling for that hype is what the rest of the world does. We just make our money with logical decision points. We don't really give it two peanuts where it goes, or a can of beans or a pack of lettuce where this thing goes. I don't care, as long as I make money on it is all that matters to me. Just like everybody here, that's all that should matter. It's like, doesn't matter. Up or down, don't care. $1,000,000 or $1, it really doesn't matter. So that's you know, really big oversight by people who are new to these industries, think that making money is easy and fast. Like making money is not easy, no matter what it is. You know, it's easy enough as it is in the markets, but you know, sitting here and holding Bitcoin is not the solution. Yeah, I think this becomes an okay buy here. I think it becomes an okay buy because you've got a lot of things that can indicate an easy and quick exit. Like you've got to assess this and say, okay, well, where could this thing go? Maybe right here becomes a smarter buy. Could it ladder back to here? Is there something it can create as an origin? Like we haven't looked at any of that. Like right now, immediately on my screen, origin level, right? So like this is going to be the point that breaks the move. You hard close over this, you're gone. So we need to find what time frame that is first and foremost. So it's not the 15, and it won't be the hourly. Of course, if it's not the 15, it can't be. So you've got the hourly level here that's holding down that. So let's start color coding these things so, you know, we can at least kind of monitor this thing throughout. So you've got the hourly there. You've got the 5-minute origin here. So I think immediately you can just kind of, I don't want to rule this out. I want to rule this one. No, actually, because you need to start measuring your buys against what the breakout point is, right? Like this is a maybe a good follow-up to Franco. I think it was Franco had that question. Somebody had that question about trying to assess risk here. I think it was Franco. Hopefully my mic is not too quiet or too loud. Hopefully it's okay, like even tone right now. Yeah, Franco had mentioned that. I think you can measure and find this as the polarity point here. So like we know that this is going to be kind of like the polarity point in the move. So I think this is important to identify first as polarity. So if you were to do this, you identify this as polarity first, because it is what's going to break the move. So now you can measure against, is it going to hit the hold level? Is it going to hit the trend? Is it going to go down to the final hold level? Can it ladder the move? In all scenarios, I think hitting this polarity is pretty critical. And then the next part you can do is you can say that, yeah, you have nothing else actually. I was gonna look to see if you could actually make polarity somewhere else in here, but you can't. You can make it here if you hit this level and move up, but that would be kind of a really tough one to do. I think that becomes pretty high risk, right? Like I think you can even have like interior risk like this against interior risk. Like say you hit this level here and then that becomes polarity in the future. So not only would you have to hit this would have to hold, and it would have to, it's 3 steps too many. It's you're just asking for way too much. Like, okay, fine. So you continue to hold this level over time and it becomes your point of polarity. Maybe there's even a valley right here. Maybe this is, you can even rewind it back to here and see if this is something here. 15-minute level doesn't hit that. I can tell you that. I know it's not hitting this. Well, I don't think it is anyways. Maybe it's the 5-minute valley. It's nothing there. That's right there, right? So there's no actual polarity there. Maybe here on the 3, but that would be stretching it pretty thin. A 3-minute origin level, I don't think that's really something I would trust. So now you can kind of define where these points of polarity could possibly be. So right here, what was this one? The 3-minute? That was a 3-minute. So it can't be this one, right? That was the beginning of the move. Could it go down there? Yep. Could it create polarity here? Yeah, but I don't think I would take that trade there. If it hits it again, sure, then it's an origin level. But right now, you're trying to buy the creation of an origin level. It can go way below that, and then, like that's the thing about origin levels is they can go way below it and then come right back up. Like it becomes dangerous to buy an origin level on the creation of it because you don't know what hold level it's going after to come back up to close that time frame, right? As one of those ridiculously nasty things where it goes down like 3%, instantly comes back over top. Yeah, okay, fine. You get liquidated trying to buy this level, but you were right in the fact that it was a origin level for the future, so that becomes pretty dangerous. So this is like ultra high risk. So now you have kind of the measurement of all things current. 5-minute, I believe this was. Yes, this should be a 5-minute level. 5-minute level. Origin level already. The hold level that will protect the origin and ladder the move. The origin level getting hit. What it attacks. So maybe this becomes a smart buy. What it attacks. And I think the faster it goes down, the better it is to take this, because attacks this, it's easier to regain trend in a short time. The further you get out, the more of a bigger time frame you're looking at here. Now the more of a drawn out time frame you're looking at. So I think that is a really good way to do it too here. If we go fast, like if we attack this thing quickly, you go here. If you're getting below this trend here all the way out here, I think getting this hold level or one of these becomes your buy the later on in the day it goes, and the faster this thing moves down, one of these two become your buy. So like right now I like this level. 39.6, 579, 580, just go 600. And then you can always say, like, what's the difference here? Is it even worth trying to possibly miss a level? Yeah, over 10% it is. Yeah, because we're not certain this thing is moving up. Like, I would rather be in a protected position. Like, this is even a pretty thin spot to buy, but if you were going to long right now, this is how you would look at it. And this is quite thin as it is already. This is quite thin as it is already. So I think that there's nothing really backing up getting to these lower ranges here. So one of these two right now, one of those two later. 4-hour range trend, sure. Then we'll get into it. So you've got 4-hour range trend, which would be you're talking about I think on the bottom side, right? Like the uptrend is what you're probably referring to here. This. I believe that's what you're referring to, right, Luke? Yeah, you, like same thing here. 36,963. So not this, you're talking about down here. $36,963. Maybe screen share? Or not screen share, sorry. Maybe take a snapshot and show me which one you're talking about. I'm not sure if you're talking about uptrend or downtrend. Probably an uptrend because you're talking about prices down here. 36,963. So if I mark this on my screen, 36,9, right around here. You're talking about this to this right here. I don't think so. I think you're talking about this one. Posted it just before you went live. Okay, let me take a look. So right now, I think you're like, Luke, you're kind of in the same spot as you were here. If you break this 4-hour trend, you're going to be losing this daily, because you break the 4-hour trend, you're going to move down. It's automatically going to pretty much be closing the daily. And you know, and then you could even say the same thing if you were using this, which I think you're better off using this right here. For the fact that you had the floating hold level, the floating hold gets hit, you can create the range trend off it. It's just it's a forever adapting trend right now, right? Like first it would have been here, and then it would have been there, and it hard closes to here. So this is like perfect, and now it's down to here, right? So the hard close would actually be right here. So you'd be right here in the move right now. Not quite at that bottom. Like I'd have to trail this thing through, but that's what it looks like there to there, right? Here, which breaks there. Then you have that there, and then you have this here. Then you'd be right here. Yep. So then you'd be right here. That doesn't look like it hard closes. No, it doesn't. And so then you'd be right here. So like you're right here right now. You're in the same thing. If you start closing these bigger time frames out here, it's going to be the same thing as what it was up top, right? Like it would, don't adjust your daily trend to the 4 because of the same reason, right? Like interior part of the move. Even take it one step further and go like this, which would almost be the exact same trend, but I wouldn't. I would just use, be very close. Like you'd go down in time frames and it's going to be very close. No, not quite. Actually, it's quite far away. Make sure that's snapped properly. It's pretty zoomed out. Yeah, it's kind of like the same thing at the top. You instead of adapting the daily, you have the 4-hour. Oops. You have the 4-hour, and when the 4-hour starts to close, it's going to hit the daily. So that's, you know, almost the same thing as we saw on the top side. Move down a time frame and you can start cycling it if you wanted. Like you could start cycling it, like you have the hourly here. Really, this trend is like a disposable trend because we really need to pay attention to the daily. So you could start adapting this right now. This is a trend that I would say you're fine to adapt. So you could do this and then see where the 15 breaks, and then the 5 and the 1. It's a disposable trend. Right now, anyways, just because of the same thing, like you had it on both sides. You had the 4-hour here, and you have both protecting the higher time frame. Hopefully that makes sense. In a way, it's disposable. Again, because losing the 4 hours is not really the key metric here. The key metric is losing this daily and creating possibly something on the bottom side of weekly to weekly, right? Like possibly creating that move down, and then you have two trends working against each other. You know, you have an interior weekly that will create the exterior weekly, like from here to here, and then from here down kind of thing, or possibly even a monthly. Getting a little far ahead of ourselves, too many steps, but I think you understand why I say this. It's disposable because it's already in the event of losing the bigger time frame. Just like on the top side, it was already under the criteria of the event of losing that. If this daily trend wasn't here, then sure, maybe like it doesn't really do anything for us, and we can use that interior range. But right now, it's just being superseded by almost like a brother event, which is like right beside it. I guess we should get to the lesson. Yeah, we'll get to it. Okay. I think this type of review helps though. Oh, Triple Sam, we'll get to your question first. You asked something too. Would you stop buying 39,579 if it hard closes? Let's take a look. 39,579. So this is that 1 minute level. Yeah, I think you need to, like if it's hard closing this 1 minute level, it's presumably already breaking this. This is created on the 5, right? I think you just need to really pay attention to at what time it's attacking that. If it hard closes that 1 minute level, say at 6:51, you've still got 4 more minutes where you could reclaim this level. If it's doing it at 6:54, it would be different. It's 1 minute away from attempting to make a hard close. So I think you have to be aware of that, right? Because there could be a possible 10-minute span where you go underneath the pull, like underneath your origin, right? Sit down here underneath the origin. And then there would be, so if this happened at 6:51, for example, you went all the way down here at 6:51. So 6:50, it goes like this. 6:51, it's down here. It's starting to hard close this level. It needs to stay here for 4 more minutes in order to create that 5-minute candle. And then it has to actually close that in blue. So you've got like a 9-minute span from this to be able to regain this level. So I think you have to be aware of that when you're in the trade. Do you have a 9-minute span? If it happens at 6:56, you're less, or 6:51 to, instead of 6:51 to 6:54, then you've taken 3 minutes off that span. So I think it has a lot of even easier time to close that level. So I think you have to be aware of that. And it's really superseded by this 5-minute level. Okay, let's boogie. We now talk about kind of the development of ranges and tops and bottoms of ranges and how to see if things are moving up or down. Yeah, maybe we'll not start on a 1-minute candle. Maybe we'll go to a 5-minute candle to start. And we're going to pick a random spot here. Yeah, sure. This one looks good. So you're in this move right now. Let's say we bought right here for some reason. We bought right here for good reason because it's a hold level, right? You can buy there. That's fine. How do you see if this thing is going to move up or down? You know what? Maybe we're going to do it on this chart instead. I think this is going to be a little easier to do it here. Let's just remove everything is gone. Nothing here. Good. And pick a random spot. Again, 5-minute chart. Right here. Looks good. So you're in a move. We're going to talk about a long position here. We have this here. So we bought this position. We are going to go to the replay tool, cut it off, and starting to dissect the chart architecture more. And when things are moving up or down and whatnot. So we're in this move right now, right? Like we've bought in here. So our order got filled here. So we're going to say 95.68 is where we bought. Okay. So the first thing we're going to do is we're always going to kind of set this parameter from the past of what's happening in this move. So, okay, good. We have something here. You know, we would have had this to this, and that's fine. And that trend breaks, make it move up, and blah 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 blah. And you know, you array it out to this one here, to this here. Eventually, you get to this here. So you've said, okay, this is where I should be buying right here. So yeah, okay, that looks good. It was a good buy, and so we're going to move our order back actually, but 95.58 because this is really where we should have been buying because this one was already knife caught there and it moves up, and this one's knife caught there. I think an important thing to realize here is you have a daily trend that you've drawn. So your daily trend is here, right? The hourly level, given the amount of time that this has existed, suffices as good support in that moment. So when you mark this hourly level, there isn't a lot of time that has passed. I would say you likely wouldn't be going after a 4-hour level, or if you were going to, if there had been more time passed in this move, you would likely be going after something where it's trend, where it's a little bit deeper in the range. There's not enough developed here to say, okay, well, the hourly part of the move makes the most sense, right? Oopsies, let's go here real quick. And, it would be like roughly 30 candles. It would be like buying this hourly here. It would be like roughly like buying, this hourly here or this one here, one of these two for a move up. It would be roughly the same thing if you look at the length of what's happened on the charts here. 1, 2, 3, of kind of 4 of these vertical boxes. Of course, I have mine turned off. I have the opacity turned down. It approximately looks like the same kind of length as this. So given that you would have trend, I'm trying to here we go. Meaning that you'd have a trend like this, breaking this trend, the hourly roughly makes sense to attack. If you were to move up to a 4-hour, you wouldn't have a lot of information there. Like the 4-hour can definitely work, but here you don't have enough time developed to really go after any higher time frame parts of the move. It's a pretty short time frame interval. So just something to be aware of why this makes sense. Floating level, the time frame makes sense, and you've had enough development there that where an hourly makes sense.
There, and it's going to move up. And so you're deciding what to do in this trade, right? So you're starting to think of like chart architecture, and if you were to reverse this chart, it would be very much the same thing, right? So just keep that in mind. The first thing we know is that there's kind of no moments back here that are untested. So we know if this level gets lost, it's time to get out of the trade, right? So we set our buy at 95.58. We can set our stop at 95.55, for example, a few dollars under. Maybe we want to go to like, well, we've already bought here. So now we need to establish if we're going to break the trend or we're going to get stopped out of this trade. So we'd go to 1-minute charts here and we would say, okay, yeah, we bought this. This has already been tested. We can't use that. This one's not tested. Even though it looks like it's tested, it's not. And then you'd have this right here, and this one is tested. So you'd kind of be like you have an option here of two things. You can either stop out of this trade on this side of the chart, which means the price can't really drop below this point because this is what was holding in the past. So you pretty much stop out. Like if the bottom of this candle here is the low is 95.66.
Yeah, just
you'd
the latter
stop out
point
at like
representing the test, right?
95.64, right? Your entry's at 95.58. Wait a second, I said that wrong. I was on the wrong candle. 95.55 is a low. So you've bought in 95.58 and the low is right here. And you can see it's already moved down to here. So now you have an option to stop out either a few dollars under this. So your stop would be something like right here. And we'll change our stop to green and we'll work with this only. This is the way Binance says that they have like a green thing for the stop. So you'd set your stop here. Basically, if you come down to this price again and you go below it, you'd want to pick some kind of number that just limits your losses, right? Like maybe something like this, 47.73. Looks good. $10 away, not too much of a blow. 10%.
Yeah, compared to the old audio. So the audio should be really good now.
And we can continue going through this trade, right? So this is tested. Now you have a decision to make, and we're going to use two stops here. You either stop the extreme piece of the move, right? Or you follow this trail to the next untested level and you stop below that. So in scenario 1, right, we are stopping here for a small loss. In scenario 2, we are locking up our profits. So if we had bought in rate, I believe 58 was our buy, 58 at a minimum, we walk away with 37% on this trade, right? And that's fine. So you have a choice there to make. So that's the first thing we do with this chart architecture, because that's what it's going to be, right? Like you're moving these stops up, and at this point you can assess the larger time frames and say, okay, where do I want to stop out? There's nothing on the 5 here. Okay, that's fine. Is there anything on the 3 here? No, that's tested. That's fine. Brings us back to our 1 minute. And then you could go to this point and say, okay, well, like let's stop out right here. Maybe there's not a strong enough candle. So you're going to actually, in my opinion, I would just actually leave it where it was. I would go here and I would just stop out here. Leave that 37%. I don't see locking up an extra couple dollars here really worth it over what you could potentially lose in the trade, right? Okay, so like right here, I'm not really certain if you would have been stopped out there because it actually should be underneath this right here. So there should be something like this. And you also have now your trend developing on the other side, right? So you guys are looking at this move, you're thinking about exits and how to get out of this trade. And let's make the larger trend here. So maybe that looks like a 1 hour. This is something we need to do before we make any of these decisions. So it's not really anything on the 1 hour. So we need to make the 15-minute trend, then that's fine. You'd have this right here, but more so I'm looking at something like this right here. So more of the immediate piece to the move like this, right? This, or maybe like this, give it a little bit of room to breathe. So you can stop out right here, and then I'm on magnet. Okay, we got to go to the 1 minute to find that point. Really, you want to hold that piece of the move because you can see how it's polarized on either which side, right? Like you could even technically come back up to this level and set your stop slightly above this. Like you could set your stop slightly above that, like right there. You could.
Yeah, and that's the thing here, right? Like you really want to create that trend when that move is not really, it doesn't have that development, right? Like you're not looking for 4-hour hold levels. Like in here, you're not looking for 4-hour hold levels. Even if it could theoretically develop right here, let's say it can develop here as a 4-hour hold, you're not looking to justify that. The short, fine, whatever. I don't even know if that makes sense as a short yet, right? You're more looking to build that criteria for the lower time frames. You have to build those lower time frames first, and I think everybody realizes this, but it's just a good recapping point that you really got to build those lower time frames first. Because if you're, for example, shorting this 4-hour level, say you just really believe the wick is going to be it, the second you move to a smaller time frame, you can see where that development isn't going to give you anything, because you got the hourly here, you've got the 15-minute up here, which is tested, 15-minute here, untested, completely untested part of the move. Go back to the hourly, you find a little bit deeper in the range, you can go to the 5. That 5 backside is tested, 5 is tested. And then another part of the move is that 5-minute move, right? To justify these higher time frames in such a short period of time, I think that's a switch that a lot of people really need to realize. But I don't see a lot of people making this mistake, to be honest. But maybe it just helps give a bit of a guiding light and a little bit of clarity to, when you only have a few candles, like 4-hour, like we can't use this 4-hour right now. Look how many candles are. There's nothing there. So you go down to the 1 hour, and the 1 hour still here, even, yeah, okay, fine. Maybe you could use this. It's okay. You can see it represents a leg of the move. You can assume that there's an origin level right here. So you could even pull this back to needing to break over top of this, right? But you can pull that back to here. This is a 5-minute level. So if this protects that origin, you've got some pretty big clarity there. Origin getting hit, trying to make the breakout. 5-minute ladders it down, creates a trend, interior trend, right? 5-minute creates this. Interior trend, hit this level here. Interior trend dictates whether you can attack this origin again or not. So you can get a lot of information just by realizing what's eligible and not eligible, right? Like it's the eligibility of a refund kind of thing, right? Like if you go to the store and it's not eligible, it's like, okay, well, no matter, right? This is the origin level. This is not the origin level as it was created later time frame. Possibly this no, it can't be a 4-hour. It'd be the 1 hour. No, the 1 hour is right here. This is really the level we're paying attention to, not up in this range here. At that point, it would be a reverse level right here that would ladder this move, fail the origin, and give you some kind of interior information from maybe even set from back here to here like that. Legacy. I always do it the wrong way. Legacy, global, local, right? Like that. So it's just really important to always make sure like what part of the move is active, right? I don't want to use that term active in terms of active and deactive, but because we use that terminology for something else, but really what time frames are relevant. Like the 15-minute is starting to become enough here. Like not quite. The 5-minute definitely is. The 5-minute definitely is. You've got enough information and criteria here to say that this 5-minute would really be what you'd be looking at. And yeah, you've got 5-minute origin. Possibly you could create the 5-minute hold here. It's kind of a floating level in a way, right? You do have the backside kind of not hard closed, but yeah, you've got that 5-minute origin. There's enough time on this 5-minute. It makes sense here that this could hold up the move. So I'm not saying it will, but it definitely makes sense that it could hold up the move. Again, if I was buying here, I would dictate it based on how quick we can move down to these levels, because I want to see something where we move down quick and we can regain the levels on the top side just as fast by not having to travel, from this point to this point is 0.4. It's actually still not bad. It's not bad. You've got time here. You've got time. 0.26. Start coming out to here later in the day, and now all of a sudden you need to gain at least 70, 80% just to be over top of those levels again. That would be a pretty nasty bounce that would have to happen. And when is this trend created? I believe this one is adapted to the hourly. So you don't want to lose the hourly hard close, because this trend is being adapted from that 4 hours. So if you went down here at 20:57, for example, 3 minutes away from that hourly, that might be bad, because then it would only give you 18 minutes to get back over top of this. You see, because you're trying to hard close that 15-minute, right? So the time bomb becomes like 18 minutes off this level here if you were down here. Over here, you say 2030. So 18 minutes here, we were at 2038, right? Like 18 minutes here, so that kind of thing. I think that's what we said. Whatever it is we said, right? 15 minutes. So that if it was 38, it would be 22 minutes that you need. You come back over top of here. 50% in 22 minutes, it's becoming harder. Out here, okay, 17:15. So you close that hourly, and then you have that 15-minute close. So 17:15. So you've got hourly has to hard close first to move it down to the 15, right? So 17:15, you've got 45 minutes on that side, and then oh no, I think we said 7:57 before. Anyways, doesn't matter. You've got 45 minutes you need to make that hourly candle, and then 15 minutes after that. So you'd have a full hour here to get over 90%, which is, I think that's enough time. An hour to get 90%, it's enough time. So you see how you can start to kind of look to the time frame that this stuff's at. Let's pick another time frame. Let's just right here, 16:15. So you're 10 minutes or 16:50, 10 minutes away from the hourly potentially hard closing. So you could hard close the hourly in 10 minutes, and then you'd need to hard close a 15-minute after that. So you've got 25 minutes to make if you hit this level. 40%, 25 minutes. Not bad, but pretty easy to regain that level. The further you come out, right? And that's to say if this trend is being used, you can break this 4-hour trend to be the breaking of this daily here. So I would actually use this right now as the trend that needs to be kind of decycled down as you lose this trend on different time frames. You're hard closing and you're cycling down, and then realize, okay, so fine, it didn't reach its goal. Okay, let's talk about something. It didn't reach its goal. It hard closed at 15. Now you're down to closing a 15 on the 5. Maybe you're like this now, and you hold this part of the move, and then all of a sudden you start moving up, and you don't have that daily hard close, right? Things to be aware of.
Again, this is dependent on how you want to lock up profits. If you want to constantly be in profits and not worry about the larger,
we have a whole section in the future to do on time.
You would do something like this, where you're setting your stop along the trail. Now, this isn't really tested, so I think, in my opinion, I think I would put it here, just because I could see it coming down to this level before breaking trend. So again, there's kind of 3 decisions to be made here. You either worry about the larger piece of the move, you try to lock up profits as often as you can, or you take the most logical. And that's the way I would look at this. Try to take the larger piece of the move. This one is try to constantly lock up profits regardless of how big they are. And this is the most logical spot, because this is kind of the in-between of both, right? Like if you lose this, you're pretty much making, losing your move. Possibly you end up holding this again, but the risk is there. So at this point, if you lose this, you might as well just, sacrifice down here. You lock up at least some profit. So we're just going to hit play here and see what happens. Yeah, see, your stop would have been triggered there. And it's why I don't like using too high of a stop, because really you want to get to the, and let's stop it here for a second. And it's really why you want to really make sure you see the untested levels. And then even here, you could even say that same thing here, right? So we're going to keep this one on the screen, and we're actually going to mark this. And you'd be in the same scenario where you're defining, like, okay, what's the lowest point of this move, right? Versus what is untested. Like this is untested and this is. So you're kind of in that same point where your stop is either going to be here or here, right? So if you're in this move, personally, again, I would set my stop here, and I would probably set it just like a little bit over that candle, like right there. You're still locking up some profits. It pays for your trade. And I don't really see a lot of value in taking this extreme knife catch to make, like, this is decent, 89%. That's not bad. But again, I really don't know what the target is up top. Rather, what I do have is I have a couple trends that look like they're going to try to break off one of these hold levels. So I'm just going to put the 5-minute here and just let it play through for a few minutes. Oh, Jesus, we picked a good time frame. And that's kind of exactly where you'd want to be, right? You want to be looking at your untested levels, right? And not trailing it up too much, because the reality of this trade is like this. It can go all the way to right here, right? Like it can go right here. This is our final untested level. So we could have went all the way to here, pulled back, and made that trend like this before taking that large move. So you don't want to miss the move, but you don't want to also exit out in negative profits. This top stop loss here, or this bottom stop loss, I suppose, in our scenario, this bottom stop loss is the point where you're saying, okay, the move is failing. Like there's nothing really left. It's a matter of time before this thing breaks down, because it can come and hold this level again. Like it can absolutely do that. Just like it can come back to this level, just like it can come back to this level. You have to realize whatever the final point is, even if it is tested, it can come back to that level. Like it could even come back up to here, what is ever tested in the past, but you don't want to be in a scenario where you're in negative profits. If you've entered at, 58 because you caught something, you want to kind of protect that and take the least risk possible, right? So, in my opinion, this becomes the smartest level to stop out at, because you're paying your fees, you're making whatever 10%. And it's not going to be often that you see the base of a move collapse down and you lose 10% here, or you see this hit and you move up, and they kind of equalize each other out. So you don't really take losses over time, because in one scenario you're making the 10%, and in the other scenario you're losing 10%, right? So they kind of equal out over time. But the difference is this level, once it breaks down, it's likely going to collapse. And the same thing is going to happen at this level. It's going to collapse the move because it's the final low of the move that hasn't been tested. So kind of automatically rules out this level. Now you can stay in this trade at this level. That's fine. If you are looking for a larger move and you have the justification to do so because some bigger event has happened, you can definitely do that. But again, this becomes the smartest level to stop out at. Even you can see it on the higher time frames. Why can't it come back down to this level? Like even in the future, like why can't it come right here? This is like a clearly untested piece of this move. Like it's very clearly untested. And then so you have your target up top, right? So now let's, we talked about, we entered the trade and we've kind of defined the range and what it looks like. What do we do up top? Okay, so really the real thing here is we're in a trade. We know where to stop. That's fine. We've got our stop loss set. The final hold of the move, which of course you guys know is polarity. So of course this makes sense to stop slightly under it and you get your entry slightly below it, right? And you exit out slightly under it. The move is just failing down. You could even exit.
Quick note about polarity here. Polarity isn't always the level. Of course, in this lesson, range breaking, we talk about polarity breaking the range, but polarity can be many different things. As we've been exploring lately, it can be origin levels, it can be trends. It's really the final dictation of a move instead of rather looking at it just as a hold level. It's just keep that in mind. It's always the dictation of what's holding up the move and not just, a final hold level.
And reshort it if you really wanted to. But now you're in this trade and it's like, okay, what am I doing in this trade? So obviously, of course, at first we need to profit cap this move. So the first thing we would do is we look at, okay, where can this thing go? This is all dirty. There's nothing here. Like, what about the 2 hour? This range is tested. Can't use that. You have something kind of here. Can't really use that.
2 hour and the 4 hour range are almost identical. So you never need to use a 2 hour range.
That's tested there. You can't use that. So you kind of have something here. So I'm going to mark this one because you're kind of starting to have some kind of range here. There's a, like you also have this. Okay. So you could exit the trade there, right? You identify.
You can see this range without having to mark any hold levels either. You can see that this range has some type of origin created back here off of whatever it failed inside of this. There's probably some little hold level or some type of trend that broke on the bottom side before it could continue its move up. So yeah, you really can see that range does exist from there is going to be a hold level here, but also that hold level will be protecting against the origin. So that's pretty important to pick up on there, where that origin gets hit, it's telling you the move is trying to break, versus the hold level being hit, it's creating a trend, right? Like two very close in price points, but two very different outcomes. One being creating a trend, right? Like this would create that trend, and the trend breaks and goes to attack the origin. The other having the origin, and once that trend breaks, the origin is already broken. So you have to really look at this as, if that origin is hit and it pulls back to create a trend, what's going to happen is you're going to create an interior trend that's attacking the origin. If this hold level gets hit and you pull back, you're going to hit that hold level, create another interior trend. In both scenarios, you create an interior trend. But when that interior trend gets broken, it's attacking the origin point of the move. It's not breaking the move. The trend isn't breaking the move. The trend off this hold level is attacking that origin. The trend off this break level is breaking that origin. Big difference in what the data point can tell us going forward, and what that trend represents thereafter has a very different meaning based on how high this move goes.
Bottom side, how thin is it up top, right? Like this is one target. It's pretty thin. It's probably going to go much higher than that. And then it's probably going to come back down and bounce off of this one right here. And so we're not going to mark those. Rather, we're just going to start defining targets up top. And 30-minute level, yeah, okay, this starts to look decent. And that 30 is tested. It's not really good. 15-minute right here. And then, all this stuff here is tested. I wouldn't really be looking too much at that. How thin is the range? Like you even have the part of the move up here, which is actually what it ends up getting to, but we're not that far yet. So we just want to look at this move right now where it is. the 5 minutes. So this is a good target. This 98.15 is a good target. I don't, you know, you're comparing these two pieces, and you're saying, okay, this is the thinnest piece of the move. This is the piece that is more logical, right? Like if it's going to ladder, this even this is thin compared to this 10.16 or what, you know, whatever's up here, this 10.155 or 158 or whatever that level was that it hit just there yesterday. You're looking at this and you're doing the same thing, because you've got targets and you're saying, okay, how thin are these targets on the other side? So you're in this trade from down here. You've bought this right here, whatever your entry was that we justified. Fine, we entered that. But now you're in this trade and it's like, okay, what are you doing? So you break trend, fine, great. First thing we need to do is we need to see our trigger point on the exit. So what we need to do is actually we need to revise this to that candle that makes sense. So we have the hourly here, right? And we have the hourly right there. So we have our trend. So we have our trigger point. If we don't reach our target, we know where to exit. No longer are we stopping out here or here. Our stop is now moved diagonally like this, right? So our stop is now like this. This is our stop, right? This diagonal line is our stop. We hard close this red one and we're out. And the diagonal line becomes our stop, right? So hard close the red line, you're out of the trade. Reach target up top, you're in the trade still. Or alternatively, you go like this and stop underneath this level wherever that range is, right? So, you know, you'd have the actual, where is that other one here? Do I have it? No, I need to make a new one. Okay, fine. Can move this one here because the green lines are our stop in this kind of scenario, and we know like it can't really hard close this time frame under this level, so that's fine. We have a pretty clear directive here of like what's happening, right? You have a stop under this level, you're stopping in profits, you're in this move, you have a trend that you hard close, you have this that you hard close, so you can pick one of these to stop at, and if you've reached both, you know there's nothing left in the move, right? So we were in at 96.58 right here. And we're in a scenario where 1.4% profits. Worst case scenario, we're already making 50% in the trade. So we either hit our target or we trigger out, right? So looking at this move, how do you decide, oh, this is still moving up? What's the difference between it's done its move versus it's keeping on going, right? So let's talk about that. You have to realize it's going to have targets. So this was its target, right? Like this is its target. And maybe it's even a higher time frame. So let's go back and just mark. I'm not really sure what it was. Maybe it was this. I'm not really sure how we refined this thing. Let's see if there's like an actual, okay, it's right here. It's this hourly right here, and it's defined into here. So let's just go to the greediest point into here and find where it's. So that's the top of the move, and this is tested and this is not. So this is kind of like the final moment in this trade, right? So you've got like the final piece of polarity in this trade. Like you've got the final piece on this side. So now you're in this trade. Target was hit, but you don't want to get out of this trade yet, right? So what can you do? Well, you can do a few things. You can now do this and mark this to this. And
so whenever we work with ranges, it's really important that I've been really drilling everybody on data points and what they represent. So it's really important to now start thinking about like what the data point represents, right? I guess we'll use this current piece like this. Okay, so this trend right here, if you were to draw this trend, what would it represent? So this is what everybody should be thinking about. It's like, okay, we'll use the colors that we have on the screen just at the face value of what we mark with. So we have a daily trend on the bottom, a daily trend on the top just broke, okay? I don't think these are daily, but we're just using them at face value. That's fine. You have a daily trend, a daily trend. If this was a daily trend and you have well, you know what? We're not going to use these as daily. This is a really bad example because these aren't, I can tell you these probably aren't daily trends, but if this trend breaks, like when you draw this 1 minute trend off of hitting this daily, what does this trend represent? What is this attacking when it breaks? You always kind of have to ask yourself that question. Where was the trend created and what does it attack, right? So for example, if I was to make a trend right now, you can make trends all over your screen and they all represent something specific, and that's fine. Let's go to the hourly time frame. We have, okay, so we have this right here, this hourly time frame. Let's make this blue, not dotted. Let's make it a solid line. So this hourly time frame, what would it represent? And then let's add a few here so we can do a few at once. So you've got the hourly here. We can leave that there. We don't need to know anything else. You've got the 15 minute possibly from here to there. Nah, you would do it from here. So you've got a 5 minute that goes like that. Okay, that's fine. Let's do a few on the top. I think this hourly is enough that we need. You could go really interior here and say you've got the 1 minute from here to here, right? You've got that 1 minute trend from there. Let's make that gray so we can identify the difference between, well, let's make it white. Can identify a 1 minute time frame versus the 15-minute trend, right? And let's go to the top as well. Let's mark a few on the top here because it's really important to understand that, right? Like this is a pretty critical, when we're talking about ranges, understanding what the data point represents is really important. So got this from here to here, right? So this is a 15-minute. We're going to make this one gray, right? So if you were to break this trend, what does it represent that it's attacking, right? You've tested the 4 hour. The 4 hour has created a trend, right? So you tested your 4 hour level just like what we talked about before. Oh yeah, you tested this 4 hour level, great. If you break this trend, it's breaking this level that it had been created off of, right? The 4 hour is kind of useless here because it's not really telling us anything we need to know. Like if you had a 4 hour from here to here, maybe, right? If you broke this trend, maybe if this was the trend that was in play and you went like this and you had this 4 hour trend, you could say that you're possibly now attacking the origin point, right? And so you could go like this and say, this is an origin point. And you could break this trend to say, okay, we're attacking this origin point. Now, if you fall short of hitting this origin point, you need to understand that, okay, if you hit this origin point right exactly on right here, then you could adapt this trend here like this. And then when you break this trend, you're essentially breaking this origin level, right? And if it holds again, this trend failed and that trend is no longer being used and it's going to be a big move down, right? So there's always kind of like a bit of a hunt that you have to go on. And if this fell just shy like this, it means that the origin isn't in play. So when you break this level, you're attacking the origin. You're not breaking the origin. You're going to attack it next, right? So if you were to go here, this would be your expected result. Anything short of that would be like an instant dump, right? Anything that deviates away from that, anything like this would pretty much be an instant dump. And this would just solidify this trend. If this trend here is being created prior to this, this is supposed to attack this level. And if it breaks up over it, you have a massive breakout happening. That's a trend breakout, like a big time trend breakout, like your origin level has that massive breakout. Now it's not really an origin level yet, so it would have to actually do this and then they could create that trend here, and this trend breaks and then you fail it, it would be a massive move down, right? So whenever we're talking about ranges, whenever we are looking at what breaks a range, what holds a range, whenever we start to dissect ranges, we need to really understand that, I've been saying this for a long time. There's trends everywhere. It's all about finding the important one. So when a trend gets created, we can create them anywhere on the chart. It's realizing when that trend breaks, what it's designed to attack, right? Just like up top here. So we can actually just pull back to this 4 hour right here. And we're going to leave that weekly because I don't want to have to recreate it. I'm really not looking to recreate it. So breaking this trend, it was really important that this trend can go and it can attack this origin again, right? So when you break this trend, it's important to realize that it can attack this origin. And then we had another trend on top of it, which was a moment of polarity. So when we go back to earlier in this week and summarized everything, you have a few different points. This trend breaks, right? It breaks, it goes and hits this hold level, which would have been high risk. You got to realize it's high risk because when this trend breaks, it's also giving you your daily close, which is attacking this. That's why this becomes such a high risk trade, because it's not meant to stop there. When you break this trend and you fail it, you're in essence failing the attack of this origin level. And that's why it moved down so much right here, which I think makes absolute sense. We don't need to go over that. And it would be the same thing as this example right here. All you're doing is looking at it from earlier in the week. So whenever we create trends, we have to realize what created them is going to be what that trend break represents as an attack. So you have the data in front of you. Like this, again, this 4 hour represents that it needs to go and confirm this as an origin. Anything short of that, we don't have an origin, which means we don't have a breakout point for this move, which means all we have is hold levels, which means we just have the further diminishing of trends and the constant compression of this move. What if you hold right here, right? What if you continue to hold this right here, right? Like that would be the difference of understanding where something could break out versus not, right? What if this is the origin point? I actually think this is the origin level. We marked the 4 hour. We didn't even really do our due diligence to see where the origin was. Actually, I think this is it right here. This happened first, right? That 4 hour doesn't have an origin yet. It actually just has a starting of a valley. So we would have missed that. Okay. So now you have origin, hold level. If we hit the origin, is that even a trend? That is a trend. If we hit the origin, this trend will hold us up. As we go down further in the move out here, this trend will break this origin. This trend will hold this origin. If we hit this hold level, say we hit it right here, right? Let's say we hit it right here. If we hit this hold level, this trend will attack this origin. It will not break it. It will attack it. If you fall short of that and ladder the move, you're down, you're dumped, you're gone. So it's really important that when we're looking at ranges and when we talk about ranges, we really define what can attack what, like which trend can attack what part of the move, what level dictates what trend can be created. So there's kind of this brother-sister relationship between trends and levels where they kind of argue back and forth. And when a level is hit and a trend isn't hit, or when a hold level is hit, it's failing to, it's like it's arguing with its sister. It's like the brother's arguing with the sister. When the hold level is hit, it's failing to hit the origin level or whatever the point of polarity is, and therefore just creating the ladder, right? So then you really get a deeper insight to where a range breaks before it breaks. If it's an origin level that's being hit, it's creating the trend that's going to break the origin level. If it's a hold level that's hit, it's going to create the trend that's going to attack that origin of the future. If that trend from the hold level, right? If this holds the move and that trend gets created here and you break up and fail to hit this, the move is in failure and it's still laddering down, right? So again, there's a really interesting relationship that we get into as our next phase, but this, range breaking as a whole is a really deep topic because it's really understanding that, like, almost like a brother-sister relationship that happens between levels and trends, where you can see which trend attacks which level, and if a hold level gets hit, what it really means in terms of trends, right? So that's a really, really, really interesting thing that we're going to be learning next weekend. This weekend is all about just kind of, opening that up and opening that box. Audio is really crisp. Yeah. So today's the first day I'm using my new Manly line strip or preamp, whichever you want to call it. I'm using my new audio equipment today, so it should be pretty clear. I've done some light EQ on it, so it should sound pretty good. But obviously EQ can take some time, especially for someone like me who's not a master of audio. But I'm decent. It just I'll get to it. It's it takes time. In my studio, I'm moving my studio soon, so I don't want to go too crazy over the top with my audio EQs and stuff, because in a new room it's going to be completely different based on the distance from the walls and where my desk is positioned. I've got a whole bunch of studio work I need to do, and I have to handle reflections and wall bounce and different audio trapping in the room. So yeah, good for now, but I'll definitely be working on it again in the future. But yeah, it's good that you noticed. Yeah, audio should be a lot clearer. Well, I'm using my Voxbox now, so anybody who doesn't know what a Voxbox is, we can talk about it after the lesson. Let's finish the lesson. Let's not get derailed.
This guy, and these aren't stops. This is just information. So what I'm going to do is I'm going to turn these ones just yellow, because they are just yellow and thin, and they are just points of information that allows us to understand this trade unfolding a bit better. So you have something like this. So if you break this trend, expect to kind of come down to this level right here, right?
And then, so why would you expect to come down to this level if you break this trend? Because this trend is just dictating the continuation of the current move up. It's not a part of the larger trend down here in the red. It's not a part of the larger trend that would be attacking the origin point of the move. It's not even a part of the, if you can think of it as a global local legacy, it's not even part of the, I just had that from the middle out. Jesus, that was weird. Legacy global local, or local global legacy. If you can think of this middle trend, this would be the global information representing the global part of the move. So if this trend broke, you would expect to attack the backside hold level, right? If this trend broke out here, you would expect to test it at a minimum the front side hold level, or possibly the origin point, the other polarity points. Because really then when your trend breaks, and this is some of the stuff we'll get into next weekend, when your trend breaks, it does actually. I was going to say in a way it can dictate something, but maybe the better way to say this is in a way it can make you see where polarity is. So based on which trend is breaking, kind of highlights the point of polarity. Like, God, I wish there was an easy way to illustrate this, but imagine you have, all these boxes are, one color, and like those are your levels, and then these trends are these colors, right? If this one breaks, and this is the one that breaks the part of the move, then it can highlight and say, oh, then this is your polarity, right? Or, if that's, it could say like, oh, that trend breaks, this is where polarity is, right? Like almost like think of like switches, right? Like you hit one switch and it shows you on the other side of the level which bridge that puts out for you to cross, right? Like every button that's pressed has a bridge that it drops, and there's 10 buttons and 10 bridges. But just breaking the biggest bridge, it's a puzzle, right? It's like keep adding boxes to infinity, and this is a numbers puzzle. Think of it like this: 3, 6, 14, 2. You hit this. I did this wrong way. Let's go this. Let's say this is a trend. This box is the trend. You break this trend, right? It opens up drawbridge number 6, kind of thing, right? You break this trend, and it opens up drawbridge number 2, for example. So it's interesting because there's a way in which we can see that depending on which trend you hit dictates the point of polarity. So these are your points of polarity inside of the move. So you can have multiple points of polarity, whether they be origin levels, final holds, other trends. Each one is kind of intrinsically connected, right? Like each one is kind of intrinsically, therefore, connected to another level. So it's like that. Yeah, good. That's the right color. So when you break one trend, it shows you where polarity of that entire move is. And if you don't hit polarity, then your larger time frame trend is doing something different, right? So get back to this part of the move.
It could kind of come down to this hold, or even the top, whatever. Maybe this is a 3-minute or 5-minute right here. Expect to come down to this level, right? Maybe let's find the level. Okay, yeah, right there. Expect to come down to this 3-minute level if you break this trend, right? But that's not saying you should get out of this trade. This is giving you information to show you, okay, what are you doing? So you have all these places you could stop. So you could actually do it like this. And if you wanted to lock up more profits, you could stop out like right here, right? You could stop out like $1 under this one here. So now instead of locking up, 50 down here, you didn't take 1.5, but you did take 1%. So you took the in between of both. At that point, I think I would just be taking my target. I would either be looking to see what my target is up top, or I would be looking like I don't like this as a like it's fine if you want to defer risk and you're saying, okay, you missed your target, you're not comfortable taking the knife catch targets and you want to defer risk, fine. But at that point, I think you should just be taking your target there and make your 1.5% and be on with it. Like go on your way there. Now in this trade, we have interior trends, right? So like what's the difference here of a move breaking up or down? So you have an interior trend and nothing is developed on the higher time frame, right? So we're just going to go through a few candles, and you actually have something now. You actually have a trend that needs to break to hold this move. Then you actually have another base to this move. So you have this right here. Now this is going to hold the current range. This is going to hold the overall range. Like these are both capable. This 3-minute here and this 1 minute here, they're both capable of holding this range. So when we're in this trade, it's not like, oh man, we lost the move. That sucks. However, you also held the range. Like you could have come down here and still been holding the larger time frame range. At this point, we don't have any interior trends left. We're already showing that we're not creating a cycle at this point. There is no cycle left in this trade, right? So now we can just array this out a bit here like this, and that's fine. It's gonna probably break down a bit here, and we're gonna have to array it down again. And it's still holding the move. So you can see where not only is this holding a range, but now your trend is like this, right? Now you have a trend like this because you can't move it to this point here. That's not a real trend. And this is already broken. So you can't hard close it here, right? But you can hard close it here against this. So you see the base of the move develop. You see that you're in this move. And this is the difference between something already hitting its final target versus something already failing. A failing trade won't typically go over its high of that move. Now, this isn't always the case, but you're also breaking your trend already. You're also creating a hold in the move, the base of a move that's holding. And again, you could come all the way down to here. More importantly is breaking this trend, this final trend. But you're gonna also have a trend like this now. So you do have a few different trends here that are gonna break and show you injection points in this trade. And you can see you don't really have any hard closes under this base. So when you start to see this, the range isn't done. There's no untested holds left. Like that's the key giveaway number one. There's no untested holds left, right? And that's fine. You can move this out to here. We really don't have a point where we would stop out yet, in my opinion. I don't. There's no real stop out in this trade. Like you should just be in this trade, and you should stop out if you hard close this. So what I would do here is I would do this. Take that away, and if you hard close this, I would stop out of the trade and take my profits up in a higher range before trying to come down and test this. And you can see that you've already broken the first range, you hard close it, you move up, you break the second range. Like there's no hold levels left. So like this is why levels are thin, because this is the kind of stuff that happens, just like what's happening in the past day. You have a range, and this is very different than if you were to look at this right here, where you have top of a move, you have this, and you have a final hold level. These are two very different looking, and then this trails to here, right? You can see the visual difference already, and then this isn't tested. So you even have untested levels. This one's not untested, but this one sure is. So you even have untested levels. So how can you continue to break up in this range if you have untested levels, right? Like you can't. You can really only go to this point, and
this is where I would look at this chart and say, okay, what trend is attacking this level? And that's how you start this process, is by having your levels and saying, okay, what trend is attacking this level? That's the key piece of information, or one of the key pieces of information on this chart.
And that's why we stop out at that point too. That's why our stop ends up being right here, because they really can't go over this. And if it does, then fine, it's breaking the range. Just like with this, there is no untested levels left. It went over top of them already. It broke its range. So how thin is the move versus where's the real target? Well, that's kind of obvious when you see the trade and the trends happening, right? Like, and then really our key thing here is hard closing over this, because this is our polarity. So you've already started the hard close over that here. And I'm sure I think it's going to break it here. No, it didn't break it. Nice. I'm sure there is something else here in a different time frame, like maybe here, or we just kind of picked the, where's the bigger time frame here? Oh, so there's nothing there. So it actually is like a 5 minute then. So it is a 5 minute, and it does break here, and then it's like you're already breaking your range up. Like your range is already breaking up, and then even interior in this move, you would have this to this trend here, right? So like your stop can be this level here. If you hard close under this level here, that's your stop. This is no longer a stop. This is just what it hard closes over. So the green is our stop here, and again, you now don't have. Right, like you don't have any of these trends. You're back up at this point right here. So I'm sure if I click one candle here, it's going to be no hard close yet, and that's probably the move right there, right? So you can see like you don't have any untested levels. Go hard close over this, and the move is gone. Like these aren't even there anymore, right? And you haven't. Oops, I need to leave that one there. And you haven't really gotten out of this trade, because really what you should be doing is you should be like this. Did I grab the right one? Yeah. What you should be doing is you should be like this from here to here, right? And like you can stop out underneath this trend, whatever. Oops, I need to mark this one here. So you can stop out underneath whatever this trend is here. I guess I have to kind of do that, move it sideways. You can stop there, right? Like this is what it can't really lose, and this is where you would stop. Right there, right? So you're in this trade, and you can stop out there, right? Like you can stop out there in max profits. Again, I think I wouldn't be using that in this case, because it still just clearly looks like it's breaking up. I would be more looking for the hard close. But again, this is another place you can stop out. You can stop out below the trend, because if it's going to lose this trend, I would maybe even use a deeper trend here. You don't need, like the problem is you don't really have a trend right now. You know what you need to use as a stop on this trade? This right here. Because you don't even have this yellow trend yet developed. So as this move is unfolding, we're kind of getting to a bit of a better point here. So your stop is maybe something like this. But really, I don't even think I would use trend to stop here. This I can see as being a good spot to stop out on trend. But again, I'm not, this is kind of for visual reference. I am more stopping on the, I'm not setting a stop here. I set my stops at levels. You break a trend, you hard close a trend, you have to understand that, okay, if I lose this trend, the gap is to here, so I should stop out if I hard close the level or the trend itself, right? So I don't set my stops against trend. Well, actually you can't, because it's impossible, because you can't set a stop that kind of follows the move. So you can't, right? So you can see, like, you don't have any.
Okay, so let's dissect the first part of this. You have a hold level here, right? Let's go forward a little bit here.
To leave that one there.
You have a hold level here. This hold level represents the failure of this trend. So that's kind of the first thing to realize. This hold level can be two things. This hard closes, it represents, this is breaking the move, obviously. And if it continues to hold, it's larger time frame trends. Now, again, we don't know the story behind this trend. We're going to assume it's a daily here. 5-minute trend, we're assuming this is the daily. It's likely something else, but that's fine. This holds it down. Typically, you're going to have failure in this part of the move, right? You're going to fail this trend. Again, exactly what we saw earlier in the week up here, right? You could just mark the first hold level we see. Some type of interior hold level holds the move. It fails that break of that trend, right? You break over top of this trend here. So right here, hourly hold level. This continues to hold. It represents the failure of this trend breaking. So it's when you're looking at ranges,
then you haven't really gotten out of this trade,
thing here.
Really what you should be doing is you should be like this. Where you would stop. Right there, right? So you're in this trade.
And that makes total sense, because you're being told that.
And you can stop out there, right? Like you can stop out there in max profit.
Hold levels holding the trend breakdown. You've lost your trend. You're about to start cycling down in the move.
Unfolding, we're kind of getting to a bit of a better point. I think I would use trend to stop here. This I can see as being.
This interior trend represents this attack level collapsing. So if this interior trend can hold, that collapses. If it can't, it's attacking this to hard close underneath this level.
Good spot to stop, or the trend itself goes on, that price raises. So you can't even really set a trend stop. But the idea is that.
Let's go back to our current move. And this is really where people need to be kind of working with trends right now, thinking about which level attacks which trend and which trend gets created based on which level. You know, when a trend breaks, it has a point that it attacks in our charts, and recognizing that from the start is pretty important. Like when you're talking about ranges and how they're developed, you know, you've got a 4-hour hold here, for example, like this one here, you've got a 4-hour hold. So what can this even tell you in this moment? Well, first off, we already know it's too short time frame. It can't really tell us anything. So that when this trend here breaks, does that just mean this level is failing? Yeah, pretty much. Like, but what else does it represent? Because this trend, the origin point of this trend doesn't give us any information. So like it's telling us that you have the hold level here, right? Your hold level was hit, likely going after a deeper time frame. We don't need to worry about that for this example. On the 4, so the 1-hour hold level is hit. So we can use this as a 1-hour trend, right? We can use this as a 1-hour trend, right? Resnap those points because we are on the 1 hour. So when this trend breaks, what is it telling you? It was created off the 4. It's telling you it's breaking above the 4-hour backside. So like it's not really giving you any information. Again, you can diminish this back to how long this trend has been in existence. It's not really doing that much for you. Alternatively, you have this hard closes to here. You can move down this down to the 15. And when you break this 15-minute trend here, even if it's, you know, much past, let's go back to that hourly actually for this, so this becomes very clear. Get rid of this. Get rid of this. We just want to use the example that's current. So this trend here, hard closes is 15. It started as an hourly, hard closes at 15. When you break this trend, this hold level will collapse right here, right? So there's that relationship that happens between what trend is created off of which hold level and then the cycling of trends and which trend breaks to attack what part of the move and what part of that move was attacked to create which trend. So again, there's that relationship that they share between what trend and what level, and one attacks the other, just like my drawbridge example. One button, this will attack this level, right? As it cycles, there will become a point where this breaks this level. Icy says, this is so cool, internet bad. Yep, no worries, replay up today. Yeah, I saw that you had to go there, Icy, no worries. 1 hour was previously hit, so does it represent failure breaking the hourly downtrend? Nope, no, this could just be a ladder point for the trend. Just because the 1 hour was hit doesn't mean anything here. It's simply creating your higher time frame trend, and if it's not creating a higher time frame trend, it's just simply creating that interior trend, which was already from here to here, which hard closed, broke the move, that held it down. So now you have the cycling of the move off of this part right here. That's why I changed the color from blue to gray. That hit that creates a trend as a first hit of the hold, and ignore the first few hits. No, you don't want to ignore the first few hits. You have to start understanding that, you know, multiple hit scenarios can create origins. So I would also look for origins here. I would look for origins at higher time frames, right? Yeah, it can create reverses, ladders, the trend. This could just constantly ladder the move, and it could cycle the trend. Like this could cycle the trend and create ladders. This weekend isn't about understanding quite yet how to do this, rather that there is a relationship that happens between when you're breaking a range. It becomes a pretty big topic. Like when you are breaking a range, there's ways in which we break a range, but it becomes pretty tough to identify which level and which trend. It's a lot of trial and error, and it's a lot of theorizing what could be what, right? Like it's heavy in theory, but also has very precise points. But it's also heavy in theory because you're using a lot of the information now at this point. Like you're taking a lot of the components that we've been talking about learning: polarity points, range trends, hard closing higher time frames. Like right now we're still under the daily, so that has to be, we have to be aware of the implications of that. You're starting to talk about a lot of these components, and there's interior and exterior pieces, right? So obviously exterior would be the daily here because that's the larger event that's happening, and interior would be, can we, you know, maybe I can explain it a little differently like this. The exterior event would control the larger piece, which obvious, right? The daily breaks and hard closes. This interior piece that's found, you know, right here, all represents whether we are indeed closing that larger piece coming that oversee, you know, the accelerants of that move, whether it accelerates down or moves up, and the overarching piece. So yeah, when you're talking about ranges, there's the interior range, and then there's obviously the exterior range, interior to the moment that's happening and exterior to the larger overarching event. So there's a lot that you have to kind of work together here now, because it's becoming heavier in theory because you're having to use more components. So it's becoming more of a mind game and less about levels and more about of an understanding, very precise and precision pieces of the chart, right? So I wouldn't look at it like that, Coco. I wouldn't look at it as we've hit this hourly, that means it must be broken, because you would say that on one time frame, but then never moving down to see, you know, there's origin levels, and yeah, like this is an origin level, or could possibly be an origin level here. So now if you hit this again, and I can't remember if we found the hourly or not, origin here. This was in first existence, so that you have an origin here, and if this origin breaks versus this origin could possibly be the breaking of this ladder point, because these two would be intrinsically connected. Because if this on the 15, make sure we didn't miss anything else. So we did. You see, it's so important to go and work time frame down and not try to skip over things, because it's actually right here. Let's get this out of the way. I can't really make sure there's no hard closes here. Yep, this is the origin right here, and that would be, you wouldn't use that one because this one would be in existence before it, right? So now you have kind of two origins here. Actually, this might be smaller time frame. I ignored that blue candle. Okay, it doesn't matter. Not important. We don't want to just go here and do an origin dive. Not really relevant for this exact part of the move right now. So hourly hold level, right? Let's mark this properly. Hourly hold level. Origin level, right? You come to a moment in the future here let's go to the hourly to illustrate this. Hold level gets hit perfectly. Your origin level isn't being attacked, which means the trend that this creates, this hourly rate here, the trend that this creates, let's put it right here. Let's get rid of this. We don't need this bottom one. Let's just clear up the visual template a little bit. This trend breaking will represent the attack of this hold level because it's being created off of that hold level. So its relationship lies here. Okay, that breaks. It's this level here, the origin that's representing the breakout. Okay, to pretend it went a little higher. So it goes and hits like that. You now have a trend that's representing the breakout. Well, where in relationship does that trend lie to this trend? Because this is cycled to the 15. So did you hard hit this and then hard close over top of this trend? Because if that's the case, you'd be breaking this origin level and you'd be clear to take off. If you pulled back, right, and you ended up underneath this trend again out here in the future, you could see this as breaking this origin point. So this would be connected to this one. You see, they all have like a connecting point. They all have kind of a switch and a bridge, a drawbridge that releases the criteria of the trade or allows it to succeed, right? So they all have like a switch and bridge mechanism kind of thing. You can call it the switch and the bridge. Sure, that's what we can call it. Switch and the bridge. There you go. Butterfly effect 2 concept developed in the moment. Not developed in the moment, but the name of it created in the moment. Switch and bridge concept. Hopefully that helps understand. That's, again, right out of Butterfly Effect 2, but hey, we created the name here. So switch and bridge concept. So you have to, when you're talking about ranges and you're breaking ranges, there is an understanding of what range is attacking what part of the move. And when a certain part of the move hits, what range is that creating? Or sorry, what trend is that creating? Let me re-say that because I said range instead of trend. The level that gets hit dictates the trend that gets created, right? So when you're breaking a range, whichever level gets hit shows you which trend controls the move or controls which piece can be attacked next. Just like I said, the switch and the bridge example, and whichever trend is breaking shows you which level it's going to attack next. So they all have like a connected point. So when you hit a hold level, realize that that trend it creates is protecting the point above it. Trademark, switch and bridge. Heard it here first. So that's straight out of Butterfly Effect 2, which is good. I don't mind teaching this group Butterfly Effect 2 stuff.